Hi everyone, this is Jay, also known as jaynemesis from eToro, where I trade as a popular investor. This is our weekly update for week 37 of 2018. Our top news this week: Activision Blizzard have released the beta for their new game mode Blackout across several platforms. This is a pretty interesting time for Activision. During the last 2 or 3 earnings calls, there have been a lot of fears kind of flown around by some of the analysts about the rise of some of the Battle Royale style games such as Fortnite and PlayerUnknown Battlegrounds. As a response to this, Activision apparently have worked on a new game mode for the latest Call of Duty title called Blackout. And basically, after watching through a lot of the footage and stuff, it seems very, very inspired by PlayerUnknown Battlegrounds specifically, more so than Fortnite. I had some concerns that this was going to be really kind of rushed out by Activision, but it turns out that so far the gameplay has been pretty smooth. There's been no problems with like lag and texture problems or anything like that, or stuff kind of popping in and out, which we've seen a lot of problems with for something like PlayerUnknown Battlegrounds, for example. So I'm actually kind of bullish on this. I didn't expect to be quite so bullish. I thought this would be a somewhat botched implementation, but it seems like they've done a pretty reasonable job. And I guess the important thing here is that the console market for this new genre of game is really pretty wide open for the taking still at the moment. You know, Fortnite still hasn't really established itself outside of PC, and PlayerUnknown Battlegrounds is basically unplayable on a console at the moment. So it really suffers from all sorts of different problems. So I actually I think this could work out pretty well for Activision, and I felt like it was something worth talking about. The beta actually ends today, so the release is coming up in a couple of weeks' time, and I actually think that we could see this game do well. The only thing that could hold it back is the fact that it's got a big, hefty price tag. So we'll wait and see what happens with that. Maybe they'll release the Blackout mode as like a standalone version of the game for a cheaper price or something like that. Those are the kind of things I think could happen. But it's interesting. I never really expected Activision to be in this position, but I think that they could well actually capitalize on this pretty well. Next up, the World Economic Forum has released a paper, a report, basically talking about the environment and how it can be used with blockchains. So the report is called Building Blockchains for a Better Planet. And in it, they go through all sorts of different angles, first talking about blockchain. They actually even kind of somewhat talk about the problems with blockchains that are using a lot of energy consumption for mining and things like that, such as Bitcoin. But the main focus on the paper is how blockchain technology and distributed ledger technology can also be used to help the environment in various different ways. So there have been some headlines kind of banded around following this report, talking about how there are 65 different examples of use cases for blockchain technology in this field. But after actually reading through most of the report, I actually think that number's somewhat exaggerated, because a lot of the savings that it makes for the environment and the savings that it kind of helps the environment with that have environmental effects are actually pretty negligible. So we're talking about things like new logistical systems, new systems for tracking products and things like that, which are technically saving power because of the fact that they're just more efficient than the current solutions. So it's not really so much about directly impacting the planet. I mean, even things like fundraising using ICOs, for example, instead of using crowdfunding websites and things like that, they talk about as a potential use case. So although on the surface this looks like a really cool and exciting, interesting paper, in reality it's actually not quite so exciting. That being said, there was some good stuff in there, some good stuff around, for example, smart homes and things like that. But there's really nothing. There's nothing new here. There's nothing that I didn't already know. But it's important to see these kind of papers coming out from the World Economic Forum, because they are basically one of the global authorities in this space, just generally. And of course, the recommendations that they actually gave at the end of the paper were pretty bang on, I think, talking about making sure that governments don't overregulate and don't stop some of these things from being potentially implemented. Our trading stats this week: we have a portfolio change of plus 3.23%. Realized profit is minus 0.1%. 23 trades were closed in total, 21 of which were profitable and 2 of which were unprofitable. Our most traded asset this week was AMD. So let's recap the trades that we did this week in cryptocurrencies, starting off with EOS. This is a pretty small trade for 4.4% profit. I think it was just a few days long, so it wasn't anything all too exciting. It was basically just a buy the dip style trade. The same goes for the Stellar trade, although on the Stellar trade, I think I mistimed the exit of the trade a little bit. I wasn't super happy with how I executed it, but it still ended up in a small profit, so it can't be too bad, I guess. And on to our stock recap, which, as you can see, we have quite a lot more trades in stocks this week. Only 2 in cryptocurrencies, the rest were all in stocks. So starting off with Etsy. Etsy has been incredibly volatile since their last earnings report, where they did very well. I made a big bet on them ahead of that earnings report, and we did well out of it. But we closed a few more trades this week, some of which were basically kind of taking profit and expecting a small drop in Etsy. So we closed for 3.4%, 2.1%, and 0.3% profit. Next up, AMD. So again, AMD, my most traded this week with 6 trades in total. Various different percentage gains, mainly around the 2% sort of area, but the lowest was 0.6% and the highest was 6.4% profit. AMD is in a really, really interesting position at the moment because their EPYC CPUs really do appear to be pulling massively ahead of Intel right now. They have the 7nm stuff right on the doorstep, basically waiting to come in at a time when we know that Intel is already struggling with its 14nm and has been for some time and is still struggling to move down to a smaller scale. So we're actually potentially, I've been looking at quite a few different things, and I've seen reports that Intel are actually getting to the point of desperation in trying to compete in this field now, that they're even looking at just massively increasing the voltages for their CPUs and basically just ending up with heating problems and, of course, expensive electricity bills, which if you're running a server farm with 100 servers and let's say 250 of these CPUs, you really cannot afford to have those electricity prices going up, because that is a big part of the calculations that these various different companies go through when they are weighing up which CPU to upgrade to. There's also been some speculation that the new AMD Zen architecture can handle really, really large amounts of RAM. We're talking, maybe even up to 10 times as much as what Intel can handle right now. So this is absolutely huge and pivotal for AMD, and I really do think that they're in an incredibly strong position right now, assuming that some of these leaks are accurate, to basically take this market over and really move into a dominant position in this market from Intel. And let's remind ourselves that currently AMD has a very, very low market share in this industry. It does take a long time for them to switch over infrastructure, because once you're kind of into this Intel ecosystem and all of your motherboards and your RAM and everything like that are all kind of bought and set up already, the prospect of upgrading into a totally different ecosystem is really quite a big hurdle to overcome for a lot of these companies. But definitely, I think AMD are at the point now where they have an advantage big enough to do that. The other thing that I kind of wanted to touch on here is that I think under Lisa Su's leadership, we could see the GPU side of AMD, which has been, for me, the biggest concern about the company for some time, really kind of invest in the R&D side of things and hopefully see a recovery. We know that they're somewhat competitive on the AI and autonomous vehicle front, although they currently don't have very many partnerships or deals in that area. They are capable of performing to a decent standard compared to NVIDIA. I think that Lisa is going to be reinvesting a lot of this money into trying to salvage that GPU side of the company and try and build it up over the long term. So in the same way that we had to build up for a very, very long time following the disaster of the Bulldozer series of CPUs, we've towards Zen, I think we're going to see something similar happen with the GPU market. And I'm really very, very bullish about AMD in the long term. That being said, as you can tell by how actively I've been trading it, I do think that it's volatile right now for a reason, and the reason is that it's gone up too quickly. It's currently in an ascending wedge formation, and usually that results in the price dropping a small amount. So that's basically what I'm waiting for in AMD before I really re-establish my position for the long term. I do think it should drop at least below $30 and possibly even below $25 at some point prior to their next earnings report. And let's also not forget that the market has really priced in a very, very good earnings report for next earnings period for AMD. So that's going to be pivotal to see how that report comes out and if AMD can really keep up and live up to this hype and expectation that has now been created for them. Next up, Adobe. Adobe had their latest quarterly earnings report last week, and I basically traded expecting a reasonably good result. And again, Adobe delivered another quarter beating expectations, so we benefited from a small 1.6% profit. Didn't risk too much, no leverage or anything like that, but just a healthy, quick day trade. I also executed a small trade in Take-Two. So Take-Two, as we know, have some interesting stuff coming up with Red Dead Redemption specifically, but I just saw an opportunity for a nice day trade, and we made 2.1% profit on that day trade. Amazon is another company that has been presenting us with some nice opportunities to day trade. They've been really struggling to stay above that $2,000 price that they breached a couple of weeks ago. So I've been trading kind of around that area a couple of times. So this trade we closed for just under 1.8% profit. I also closed 2 positions in Wix this week. One for 2.2% profit and one for 8.4% profit. This was, again, thanks to some nice volatility in the markets. And of course, Wix is actually getting reasonably close to my long-term price target for the year of $120 to $125. So it felt sensible to take a bit of money off the table, and I have been reducing my exposure to Wix over the past week or so. Next up, Spotify. So again, still very, very bullish on this company in the long term, but there was another opportunity for a nice quick trade here. The entire market, honestly, has been really quite nice this week for trading. And we turned it over for a 3.3% profit, which I'm pretty happy with. Micron has always been a stock that I've kind of struggled to trade a little bit. It is incredibly volatile. It really does go on some pretty wild rides with the price. I opened 2 positions, one of which I have closed for a 3.2% profit. The other is still open and is down by around 4% at the moment. So a nice trade here, despite the swings in Micron's price, which can really kind of put me off trading them a little bit. Speaking of swings, swing trade on Shopify using 2 times leverage for over 13% profit. This was basically a week-long swing trade position from really nice, really healthy dip that I saw in Shopify. It's been trading between a nice range for a long time. And I saw a nice opportunity to do this. Shopify is actually a position where most of my other trades are quite drawn down at the moment. But I saw this opportunity, and I'm really happy with the way this trade turned out. 2 times leverage is something that I try to stay away from for the most part with my trading, but on opportunities like this, you just can't really turn it down. And again, that leads really nicely into our Square trading. So speaking of 2 times leverage, I did close 2 trades that were not leveraged on Square this week for 1.2% and 0.1% profit. And you're probably thinking, why did you take profit for 0.1% profit? That's really low. And the answer to that is effectively that I'm really bullish on Square at the moment. The last earnings call was just amazing. They were saying all the right things, and I actually really do believe them. I listened to their Twitter call as well, which Jack is also the CEO of. And in that, I have a lot more concerns, and I kind of second guess a lot of the questions and the answers that he gives to them. But Square are just absolutely on fire at the moment. And I really think the crypto stuff specifically can drive them to higher prices. And that's why, as we come back to this 2 times leverage point, I close these trades and have actually started to open some 2 times leverage trades for the long term in Square, which is not something I do normally. Generally speaking, I try and keep my 2x leverage positions to quite short term positions. Sometimes if they get drawn down, I'm willing to hold on to them for a couple of weeks or so, but I don't necessarily want to keep them for maybe months and months. But in this case, I think that's something that I'm willing to do with Square. I know that they're really, really high. They're right up near the top of their trading range for the past, forever. But I just have this, really good confidence with how they're going to perform, especially as we head into next year. That leaves us with our two big losing trades for this week, and they are both in Solar, First Solar and Solar Edge. So starting with First Solar, minus 22.3%, a pretty hefty loss here. This is effectively my attempt at trying to move away from some of the solar stocks that we have just a little bit. I still really, really think that they've got so much growth potential in the future. But for the time being, it's just not working out, and I really could use that capital elsewhere to try and help rebuild our portfolio and kind of build things up a bit. So I closed a position there because I'm much more heavily weighted in First Solar than Solar Edge at the moment, and that just doesn't sit too well with me. The second position was a 50% loss, although it says profit, it was a loss in Solar Edge. So this was a 2x leverage position, one of the few that I've held on to as a market has really turned around. And obviously now looking at it in hindsight, I regret that decision because the market just kind of continued to slowly slump further and further. But now that we're closed, that's just how it is, I guess. Certainly not my finest moment, but we'll hopefully see Solar turn around, I think, towards the middle or the end of next year. I think it's got a long road ahead before it really recovers. But still confident in both those stocks to survive in a pretty healthy state. They're very sensibly run and managed companies, both of them. So let's take a look at our performance overall and how things are shaping up at the moment. As you can hopefully remember, last week was really, really horrible drawdown for us due to the cryptocurrencies primarily. We've clawed quite a bit back in terms of portfolio change. So as you can see, we went from being down at around minus 10% or so for September, back up to minus 6.9%, which is not too bad. It's still pretty bad, but it just goes to show that what I said last week about the potential to recover it is still very true. That being said, cryptos are still volatile, and we could end up just down by that much for the month. It's hard to tell at this stage. In terms of realized trades, as you can see, we did end this week negative by minus 0.1%. Pretty negligible amount there, the same as the last couple of weeks, actually. But I'm using this to, as I pointed out earlier, try and reposition the portfolio away from some of our big losing trades. And it does free up equity for me to go and try and make more money out of every time I do that. So I'm hoping that I can turn this month around. Certainly, I want to end it positive on the realized trades for September, even if we can't do so for the portfolio change. So I'm, hoping to end it at somewhere around 1 or 2% profit in terms of realized trading. But still a long way ahead in September. When we're just about halfway through it now, so hopefully the next 2 weeks can help us recover this month and turn it into a nice green one again. Taking a look at what's coming up. So I did mention in the previous couple of videos and updates that I was planning on attending both Blockchain Live and the EOS London Hackathon. I will no longer be attending the EOS Hackathon, unfortunately. They just didn't actually have the tickets that I wanted, and it's a full weekend of activity, and I'm not sure if I was really up for it. I guess it would have been very, very cool to have gone to it because the EOS hackathons are really kind of unlike any other hackathons that I've ever seen before. That being said, I am still attending Blockchain Live, which takes place in London in just over a week's time. I had a very, very good experience at this event last year. It's my favorite blockchain event that I've ever been to out of anything. And I'm still very, very tempted to pay the extortionate fee to upgrade my ticket. So tickets are really, really expensive. It's very business orientated event. There's a lot of networking and a lot of big businesses like PricewaterhouseCoopers, a lot of the banks and people like that tend to attend it, which is why the tickets are so expensive. But they do offer a free ticket. So if you're in London and you're not doing anything on that day, I highly recommend attending. I believe it's on the 26th of September, which is midweek. The really cool thing here, I think, is some of the the caliber of speakers that they've got at this event are really, really top notch. So they've got Dan Larimer, who is the lead developer of Block One. He's the guy that created EOS and Steam. I met him at the event last time, and it was very, very cool to chat to him, even though it was only for a few minutes. Alex Tapscott, who I have spoken about a few times as one of my bigger inspirations in terms of his ability to kind of see through the market and the way it's going, and his thoughts around tokenization and different token models is really, really interesting. Joe Lubin, who is a big name in Ethereum, and Brendan Bloomer. There's also a whole bunch of others that I can't remember. Tim Draper is going to be there, who's also one of the biggest investors in the space. So some really, really big influential players are going to be at this event. Not to mention that the stuff that they talk about on the Gov stage and some of the other smaller stages was really very, very interesting and quite cool last time. So good event. I highly recommend attending. Tickets are free for the base ticket. So if you're in London, well worth looking at. Finally, a couple of things around gaming. So Take-Two are just about a month away from what's probably going to be their biggest release of the year. Certainly up there is Red Dead Redemption 2. So this is a very, very big title that I think that they've been hinting about all sorts of different interesting gameplay mechanics, but we haven't seen them yet, so I don't know exactly what's going on there. But they've been really, really pushing this hard in terms of hype and marketing. So I'm looking at their stock and kind of thinking about trying to get in before that really builds up and starts to hit the main headlines like we saw with Activision. Speaking of which, onto Activision. Of course, Black Ops 4, we mentioned it earlier with the Blackout mode, is coming up and is due for release in, I think, 3 weeks' time, roughly. So obviously a big title for Activision, a bit of a make and break for them each time they release one of these titles. They've taken an interesting turn with it this time, and I think there is potential here for an unexpected boom in popularity. Potential. I say potential because I am still quite cautious about if it's going to happen or not, but I think that there is definitely potential here for them to take over that console market in terms of a battle royale game. So as such, I did buy into some of the hype pricing. They surged quite a lot as soon as the beta went live and people saw what they had built. And I think it could still have some way to go ahead of that if the market decides to kind of buy into this game and we see a lot of sales. So that's what we've got to look forward to. That's the end of the video again. Thanks for watching, everyone. Please follow me on Twitter, obviously on YouTube if you like watching these videos and you want to make sure that you see them every week. I also live stream on Twitch, although I haven't done so too much recently. I do live stream some AMAs and kind of question and answer sessions. So definitely give me a follow on there as well if you are looking to directly chat to me about some of my trading strategy. Thanks for watching, and I will see you all again next time.